I'll turn it around. Let me center the chickens over here. And I'm going to put it in this machine over here. Okay. Let me slide it back. I'll pull up my window. You set it.
There you have it, folks. Set it and forget it. And that is what Ron Popeil has brought to the world, and it applies as well in UVXY. Let's take a look at what's happening today in the market.
Now,
we're interested in UVXY on this channel. This is called the Short Vol Show Live, and we are live from Cape Cod, Massachusetts, with the Short Vol Show, and we have a rally underway here in the market today. There's a rally in the alley. Get your stocks. All right, so let's take a look at the E-minis here, and we are showing just a little bit off the all-time highs today. Everything's back wonderful in the stock market world. This is the action over the last 3 sessions, and you can see that big dip on Wednesday into just kind of a consolidation, doesn't know what to do Thursday, and then departs back again to the upside on Friday. Everything seems to be wonderful again in the stock market world. It doesn't always stay that way, but that is what it is at the moment. Now, looking at some of the stocks we've been following lately, MNK really struggling here. It's up 17 cents today, trading 426. And you know, when you've got a stock that has all these commitments as far as debt and the price gets so low, I mean, let's take a look at the action in this over the last few months. It's gotten so low that they just, you know, they want to refinance and stuff, but when you finance a stock, you trade shares or you put up the stock as collateral to borrow money. So when the stock price tumbles, it really hurts you because now that collateral is kind of gone. You've got to kind of renegotiate, and thus you can get this sort of death spiral situations. Now look where this M&K has come from. I mean, if we go back a year, it was trading 36, now 4 and change. Can it recover? It's not something that I really want to mess with anymore, just because it seems like it's just really trapped down there. And, you know, people, you might think, if you're not a market person, you might think, oh, wow, $4, I could buy this. If it goes back to 36, I'm going to make so much money. Multiples and multiples on my money. But things don't usually generally work that way. Once something gets down to $4, it's going to be very hard for it to... It could climb up. It certainly could happen, but it's going to be a long, slow climb. It's not like somebody's just going to pop back to 36 unless they, you know, cure cancer or something. So that one kind of in the dust. Another stock that's a little bit in the dust, you know, with the big market sell-off, it's really hit everybody, even what is considered one of the best IPOs of this year so far, Beyond Meat. This one we saw cruise all the way up to very recently, actually, at the end of July, it was all the way up to 239, but really has taken heat recently, especially yesterday with the big $20 down move. And, you know, people... This was just this high flyer that everybody loved, but, you know, people coming back to their senses a little bit and realizing that Beyond Meat does have competitors that are going to carve out their own spots in the market. And, you know, it's a tough market, that food market. And so people coming back to reality at this amazing valuation of BYND here. All right, the other one, ACB. You know, we're expecting earnings coming out soon, but just it's the story of woes in the MJ industry recently, and it's a very volatile industry. So many people have gotten burned trying to own these stocks that, you know, a lot of people are gun shy with them now, and that's true with all of these. You know, CGC was down a few bucks yesterday, now making a little bit of a recovery, but people are kind of don't want to get involved because they've been burned so many times with the MJs recently. Apple, I believe Apple might have been upgraded today, but Apple up 4 and change, looking very solid. And, you know, we're coming into the weekend. To update you on the specific UVXY position, once again, UVXY is it's a an ETP, which you can use to buy VIX futures. It takes an average of 2 futures to approximate a 30-day out volatility. And with market uncertainty recently, UVXY has been way up. However, it never seems to stay way up for long. And if we look at the chart for UVXY, we can see it. This is I believe, a year chart, and you can see the big spike at the end of 2018, and then that would have been December, and then the down move since then, and then you can see the pop in July, but it hasn't gotten as high as that pop in April, and there's just a lot of pressure for this to move down from various sources. Contango, it is a leveraged ETP, so it exhibits what every leveraged ETP does, that beta drift sort of decay type situation as it's rebalanced every day. If we look a little closer to UVXY, we can see that the first spike recently, where it got up to 42.88, it's gotten close. In fact, yesterday was all the way back up to 40, but really has faded since then, and down several dollars since then, almost $6 since the highs of just yesterday. So really big down move in UVXY. But will it stay down? Nobody knows, because we've been in a very volatile marketplace with interest rates incredibly low, and several people would say, okay, if you've made some money, consolidate, take your position off, and reset it, so that because if stuff goes your way, things could turn around in an instant and go another way. That sort of contradicts the viewpoint which I was putting forth yesterday of sort of put a position on, set it, and leave it for a while. Right now, the sample position we have in UVXY, we are long the 20 September, which expires in 35 days. We are long the 34.30 put vertical. So that position working out quite nicely with UVXY down 266 today. We also have a small 2-lot of, if we move out a couple months to October expiration, we are along the 31.27 put vertical twice out there. So showing a nice P&L today. If we were to look at the Greeks for this position, no, we're not short 700 deltas. We must have some sample position in there. Okay, so if we look at the Greeks for this position, showing us short around 200 deltas today. That, of course, meaning each dollar this goes down, we should make about $200. Each dollar goes up, we should lose about $200. So the first part of our position, 35 days till expiration. The second part of our position, 63 days till expiration. And we are kind of in set it and forget it mode for now. Certainly UVXY can pop from here, give back some of the I was going to say gains, but actually it's down. Give back some of our P&L gains by going up a little bit from here. That wouldn't be surprising, but if we look at the term structure for the VIX, we'll see that it's kind of sorted itself out, and it's looking a little bit more, well, maybe not looking so normal, but at least the front 2 months are in contango, and spot is generally below all the futures. If we look at this, look to this, and let me make sure I'm not in the way. Am I in the way? Yes, I'm in the way, of course. All right, so if we look at the term structure here, you can see the first 2 months. This is your August and your September. Remember, August is coming off less than a week from now. So most of UVXY is represented by this September future trading 1959. Okay, with spot down here at 1842, we're getting some distance between spot and the future, which is a normal market situation. This is normalizing. There is $1 and 17 cents between spot and the SEP future, which basically makes up UVXY. So if we continue to normalize, the market continues to rally, look for this spot to move lower and this chart to organize itself even more into a sort of a more broad contango shape. What do I mean by that? Well, let me get my little pen out again here, and If we put this on our clipboard, I get my little pen out here. And I'm going to get a thicker pointed pen so we can see it a little bit. Let's see. Okay. All right. So look for this to just start to look like that, going straight up and down the chart of the futures as we continue. Usually there's a little dimple out there in December, but look for this to just turn into like a full contango shape with the front month the lowest and the other months organizing themselves higher and higher out. If we do move lower, look for everything to kind of pivot off of that farthest out month. Maybe the farthest out month goes down to 18 or 1750, and the rest of the futures arrange themselves lower from there with spot even lower. That's what a normal chart would look like. But you can see how quickly, at least the front 2 months, which are the ones that are active in the rebalancing, have arranged themselves in a contango type format. The caveat, of course, is that the actual way that people, the market makers, trade UVXY is they do look at an index which has a fixed 30-day volatility, or not fixed, but that the time of 30 days is fixed on it, and they sort of make markets around that. So, but it is still interesting and useful information, at least from my perspective, to see where the futures are and how much in contango they are, because that is going to be affecting that 30-day volatility and how much this decays. And it is going to be some indication of how that actual index that this is based on is going to arrange itself over time. All right, so there you have it. That's your update. Going into the weekend, for us short vol people, things are looking a little brighter than they were a couple days ago, where it looked like it was the end of the world and we were entering recession. I guess for the overall market as well, things looking a little bit brighter as we have a nice looking rally coming on today, moving into the weekend. So I hope you your weekend is a good one. Try to forget about the stocks and all that stuff for a little while. Sit back, relax, and enjoy yourself. And we will be back to see you on Monday with more updates from the Short Vol Show live. From our house to your house, set it and forget it.